Is there any point in trying to guess when Bitcoin's market cap will flip gold?
I assume 2 to 3 cycles. I just think it's mostly time. I think you can make rough estimates based on what, map out 2 or 3 cycles and give a rough multiple for what kind of cycle would have to look like. And you can get kind of a framework for how that becomes realistically possible. Liquidity feeds on liquidity, right? So the more liquid Bitcoin gets, in some ways, the more attractive it gets. Basically, you can't
Hmm.
you can't attract $1 trillion pool of capital until you have a lot of $1 billion pool of capital on board. And so I think Bitcoin's kind of going through that process.
Lyn Alden is a renowned macro analyst, investment strategist, and Bitcoin enthusiast. Despite being regarded as one of the industry's most prominent analysts, Alden rarely makes price predictions. According to the investment strategist, Bitcoin is 100% certain to survive, outperform, and someday replace the very faulty fiat-based global monetary system. Alden believes anyone with such a high conviction in the leading crypto asset need not be concerned about short-term price moves. Regardless, we occasionally get a rare view of super bullish Lyn Alden, and this is precisely one such occasion. The renowned macro guru recently had an insightful conversation with Luke Broyles, during which she answered a question about when she believes Bitcoin will flip gold's market cap. According to Alden, this could happen anywhere between 2 or 3 cycles from now. Gold's market cap is currently above $12 trillion and slowly climbing. For Bitcoin to flip that, the leading crypto asset will be trading at around $600,000 per coin. You will need the entire 21 million supply mined and in circulation to achieve $12 trillion at $600,000 per coin. Yet all 21 million will not be mined for another 117 years. This means Lyn Alden's prediction that we could see Bitcoin flip gold's market in a few years is even more bullish after careful consideration. In addition, over the next few years, Alden is not only looking forward to Bitcoin flipping and overtaking gold's multi-trillion-dollar market cap. According to the renowned analyst, Bitcoin will completely replace or at least bite into a huge portion of the global monetary system as the global debt problem becomes more and more of a challenge in the coming decade. In the near term, Alden is also predicting a massive influx of new capital in 2024 after the U.S. Securities and Exchange Commission approves a spot Bitcoin exchange-traded fund. Alden believes this will have a huge impact on Bitcoin prices and move prices much higher than everyone expects. We will now bring you clips from Lyn Alden's interview. Please watch, share, and like this video. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks, and enjoy the video.
So for any asset, and the more kind of tightly held the asset, the bigger the effect is. But for any asset, if $1 billion wants to flow into Apple stock, for example, just right away, that'll increase the market cap by more than $1 billion because price is set on the margin, right? So an example I use is if you have a neighborhood street with like 20 homes on it, and one of those homes used to be worth 500,000, but recently sold for 600,000, all of those other homes basically reprice upward by 20%. And so only $600,000 traded hands, but this entire street of 20 times 600, thousand dollars, it just increased by what's that, $100,000 per home. So that's $2 million. Just because $600,000 traded hands, and really only the marginal increase was $100,000 for one home, right? And so $100,000 had a 20-fold increase and moved the overall kind of market value of that street by 2 million. And so the same's true for Bitcoin, the same's true for stock. Basically if a billion dollars wants to flow into Bitcoin, we probably see a $10 billion market cap increase or maybe more. Um, the recent price surge we saw from say 25,000 to 35,000, however many $100 billion that was in market cap, it's not because $100 billion flew into it. It's because a handful of billions flew into it, and then 70% of the supply has not moved on chain in a year. And so around the margins, that boosted the market cap. Now that also can affect on the downside as well. If things are in a bubble and $1 billion wants to fly out, that can drop the market cap by 80 billion. And so over the course of time, that settles towards basically whatever percent of net worth people feel comfortable holding in Bitcoin compared to other assets. The same is true for any other major asset like Apple stock or their homes and things like that. But in any sort of like major change, you can get those bigger upturns and drawdowns compared to how much capital is actually changing hands. Um, and Bitcoin goes through these hodl cycles. And so when it's in a bear market, it tends to move towards illiquid hands. And when it's in a raging bull market, some of those illiquid hands eventually do sell. If they're up 5x or 10x, they cash out 20% of their holdings and they go buy a house, for example, or they rebalance into whatever they want. And new buyers are coming in, and eventually they exhaust, kind of the situation. To some extent, I think the supply reduction from exchanges is overstated. It's a good narrative, and around the margins, it's true, but some of that has just been reclassified. So, for example, if money moves from like Coinbase Exchange to Coinbase custody, it's still in Coinbase, right? It's just it changed the type of money that it is. Similarly, some of that in recent years, like money went into wrapped Bitcoin on Ethereum. And we can kind of classify that as a whole nother exchange. That's just like the Ethereum environment is like another exchange. And so if some Bitcoin went out of centralized exchanges and towards pseudo centralized exchanges on Ethereum, that's still a type of exchange, right? It's basically this like pool of capital is meant for trading around. And so when you adjust for a couple of things like that, it's less significant than some of the charts would imply. But it still is the case that because of the hodl cycle, during this bear market in particular, more and more coins, went from fast money participants to liquid strong hand participants. And it will take a pretty significant price increase to get it, most of them to part with any of their coins.
Like every other crypto winter in the past 2 years have been harsh and quite punishing for investors who constantly fixate on price. It featured the works, everything from the massive price drops to the collapses, the repeated mainstream narrative that crypto is finally dead, and to top it, a lot of macro and geopolitical uncertainties. It is perfectly safe to assume that most of the weak hands are out at this point, and we mostly have serious hodlers left. This assumption is supported by the number of cryptocurrencies that are currently being taken off exchanges, further tightening supply as we head into 2024. Let's get back to the interview, as Alden further gives her outlook on the continued development of Bitcoin and where she believes the industry is heading.
So I think the general trend is going to be persistent. Basically, the problem. So when you adopt most technologies, you never de-adopt the technology. You never get the smartphone or electrification of the radio and then go back to not having them unless you got poor. Like unless something bad happens, you don't de-adopt. Whereas with Bitcoin, adoption means price increases, but this means leverage, which means people get over the skis and blow up. And then people that bought what they do not understand, some percentage of them will de-adopt it. They'll sell at the lows. They'll be like, I made a mistake. I bought into a Ponzi, whatever the case may be, they get out. That's hard to avoid. That's why a monetary technology is likely to inherently take longer than a non-monetary technology to adopt. It's not a 10-year thing. It's like a 30-year thing, whatever the number is. It's a multi-decades thing instead of a multi-year thing. Which judging, and that's demonstrated by the fact that we're 15 years in, and there's still a long way to go. This is like the internet, this is like the Industrial Revolution. It's not like one thing like a smartphone. It's a whole suite of just overhauling an entire system and putting in a whole nother system. Now, that doesn't mean that every cycle necessarily has to have diminishing returns compared to the prior one. Maybe the last cycle was unusually weak for a number of reasons. And maybe the next cycle is bigger, for example. The law of large numbers means you're probably not going to have those initial cycles ever again, where you have, you go up like 1,000-fold or 50-fold in a couple of years, right? I mean, those types of crazy cycles are probably behind us, at least in real terms, unless we have hyperinflation of the dollar itself, like the unit of account we're counting in. But in terms of real terms, it's easy to go from 1,000 people like Bitcoin to 1 million people like Bitcoin versus 1 million people like Bitcoin to 1 billion people like Bitcoin to 5 billion people like Bitcoin, right? I mean, eventually you do get real diminishing returns structurally, but it doesn't mean that every cycle has to be smaller than the one before. You could surprise to the upside in one cycle, and then but I think that there's some cyclical aspect inherently there, because whenever it goes up too smoothly, it's going to build up leverage and people are going to get wrecked, and it's going to have a consolidation.
Meanwhile, New York City-based asset manager VanEck has published its predictions for Bitcoin and crypto in 2024. Analysts at the asset management firm are predicting an inflow of $2.4 billion in Bitcoin ETFs. The analysts said they arrived at that figure by examining the relative ratios of the Spider Gold Shares ETF and adjusting it to $2023. Within the first few days of its launch, GLD ETF saw inflows of around $1 billion. When the analysts applied these figures to the Bitcoin spot market, they arrived at inflows of $2.4 billion in the first quarter of 2024. Outside the first 3 months, the analysts are also predicting a medium-term estimate of $40 billion in flows over the first 2 years of trading. What are your thoughts on these numbers? Do you think we can go much higher or lower? Please drop your replies, as well as your comments on Lyn Alden's video, in the comments section below. Also, ensure you subscribe to the channel, turn on post notifications, and check out our other crypto-related videos. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.